on this segment. Let's get started in the futures market to see where we're trending yet. And we have come well off of the lows earlier on this morning. We've got July corn now down 1 3/4 cents. We took this contract all the way down to 3.43, and right now we're at 3.50 1/4. So quite a comeback here, 7 1/4 cents. December 3.70 3/4. That is down 1 1/4 cents. So after the initial shock here this morning, a little bit of a rebound. Not necessarily though for the soybeans, although we are off of the low by about 7.5 cents on the July. We're at 7.98 1/2. That's down 10 3/4. November is down 10, 8.23 1/4. Got as low as 8.15 1/2 on that new crop November soybean contract. But the wheat market leading the way higher. July Chicago wheat up 6 at 4.30 3/4. Look at the range of trade, 4.18 1/2 to 4.31. Let's go to the Kansas City wheat market. Another big range of trade here. 10.5 cent trading range. July Kansas City wheat up 5 1/4 at 3.92 1/4. July Minneapolis wheat is down 2 3/4 at 5.14 1/4. Now the cotton market went limit lower, and that's where we're still at. We're down an even 300 points at 65.45 on the July, and we're down that same daily limit at 66.40 on the December contract. We do have brand new export inspection numbers. Now, these were delayed from USDA this morning, but they're out. Corn this last week, 1 million metric ton. That was up from last week. The soybeans, 513,375. That was down from 603,000 last week. But the number that's got everybody talking today in the trade is this wheat number, 842,418. That is well above last week's 537,490. So a big number here for the wheat. Let's check in with Todd Horowitz with Bubba Trading. Todd, the grain market here starting to rebound a little bit from its earlier lows so far. What about the rest of the markets?
Good morning, John. Well, the grains are showing some resiliency, and not a surprise, right? We've been looking for a bottom. Maybe they put the bottoms in today. I mean, listen, right now it's a massacre everywhere. Everybody is selling and asking questions later, right? They sell first, ask questions. I think what you're looking at here, this is where you really have to be patient and take a deep breath before you push the sell button.
Interesting. So do you still hold out hope that maybe these grains can find a little bit of a firmness here? I don't want to say a floor, but at least some firmness here and start to divest themselves a little bit away from what's going on in the China news headlines and maybe trade a little bit more fundamentals?
Oh, I think that listen, you know, I've been long grains, and I'm still long grains. I'm not getting out here. I became a farmer and a producer. I'm storing in my backyard. But the bottom line is I think that the lows are in. And again, I look at this now differently. This isn't like a trade. This is like I'm buying an equity that I'm holding. These prices are ridiculous, and they've well overpriced the downside with the hedge funds getting involved and continue to try to push. So again, if you can afford to hold and store, I would hold or get long the board, because I think, again, there's always room on the downside. There is no guarantee that the market won't go down from here. But I think we're a heck of a lot closer to the lows, and I think we have a lot of room to run once we can get out of our own way here and quit trading the news and have so many people panicking at the same time.
Todd, I want to get your thoughts over here on China for just a moment. You know, they're pretty shrewd operators. They like to buy when the prices are low, just like a lot of people do. But do you think that, you know, they could come in here and look at this market where we are at right now and still buy product from the United States, still pay the tariff, and still be, you know, about where they were or maybe even ahead of where they were given 6 months ago or whatever?
John, you know, one thing I know for sure, we got to eat. Unless they come out with a special pill that says we don't have to, they're going to need the grains. And the only problem we've had in the grains today is that there's just an overwhelming supply. It's not because of the tariffs. It's not because of anything. It's because we've had such great crops the last 3 years. There's been no disruption. So they're going to buy when they need. They're going to buy, and they're either going to buy it directly from us or they'll buy it through a third party from us. But at some point, they're going to have to come through our doors to buy our grain, and I see no issue with that, which is why I'm willing to now sit and hold. I mean, corn is basically trading at 1995 levels right now if you take out the ethanol factor.
Interesting. All right, I want to ask you those same type of question then when we come back about the livestock trade. We're going to do that next. Stay with us. More Todd Bubba Horowitz on just the other side of the break right after this. All right, let's continue our conversation with Todd Horowitz with Bubba Trading. Todd, same question, different commodity. This time, let's go with the pork. Same scenario. They got to have the pork in China, so they'll come to our door?
Yeah, but remember, Smithfield's one of the largest producers in the world. Is a Chinese company that is based here. I think we're looking for the same kind of action. However, there's one difference. We aren't at those historic lows yet. Now, again, I think we're near a bottom. You know, obviously the charts were great for a while, and then they just fell out of bed. Fats and feeders were both down like 15 or 16 out of the last 17 days. So I think they'll find a bottom here, but they need to really more consolidate before we go higher. But there is more room to the downside. Now, I'm long, I own them, but there is more room to the downside. So it's not as clear a call here as it is in the grain markets, in my opinion.
Interesting. So where does this leave crude oil and some of the energy markets then? You know, because there for a while there was talk of, well, we'll sell some ethanol, we'll sell some crude to China, this will be a good deal for everybody. Now what happens, especially with all the latest developments out of what's going on in Iraq and Iran and in that region that you were texting about?
Well, interesting enough, you know, we had some action in the Straits of Hormuz this morning, and of course, oil rallied $1.50 from down $1 to up $1.50, and now it's back down about 50 cents. Again, I believe oil is going to 58 as our next target, and then it probably will bounce a little bit. But before it's all said and done, without any major interruptions from Iran or any of these major fear items, I say oil ends up the year down around 50. Again, there's no reason to believe that oil is going any higher from here, and it only goes up when there are fear pieces being brought into the market. And I think overall it looks to go lower. Look for 58 as your next target, and then we'll look for a bounce and look for another place to sell it.
Okay, sounds good, Todd. Sure appreciate it. Todd Horowitz, Bubba Trading here with us. And Todd, have a good afternoon. Let's go to the live cattle, the feeder cattle, the hogs, and find out where that crude oil is standing right now. Over here in the live cattle market, it's August down $1.18 at 107.72. The October's at 107.70, and it's down 133. So only a couple of pennies there and one tick separate those 2 months. August feeder cattle down 205, 144.78. The September down $1.90. June hogs down $1.90 at 87.78. July down $1.63 at 89.13. And the June crude oil down 52 cents at 61.14. The July crude oil down 50 cents at 61.30. Heating oil, we got time to look at that real oil right now. It's down almost half a penny at 2.04. Christina.
All right, thank you, John. Appreciate that.